If you're watching the markets and you think something feels off, something certainly does feel off. We're about to enter our correction phase, and I'm going to show you guys exactly why over the next few weeks, going into November and December, are probably going to be weak periods into the month. But it's not all bad news. We'll probably see some sort of Santa Claus rally. That being said, going forward, I'm expecting a correction in the markets. And if you want to understand why, stick around to the end of the video. I'll show you exactly why the correction is about to take place. So the US30 chart recently just broke out into all-time highs. And this is a very, very important turning point in the market. And I'll show you exactly why. When market reaches all-time highs, there tends to be a lot of headlines signaling the market will continue to rally higher. And this information is just continued to be eaten up by retail investors and even some institutional investors, because they're not all perfect. But one thing we do need to understand is there are certain turning points that present in the charts prior to the actual decline in the markets. I'm going to show you this exactly on the chart so you're able to understand exactly what I'm looking at and why I've realized that correction is fast approaching. First things first, if we take a look, we can see that there was an opening gap right here. And this opening gap is extremely, extremely important. When price gaps higher, this level becomes a very, very important level for institutional investors. As well as this opening gap, we also had external liquidity. And don't worry too much about what external liquidity means. Just know that when price is trending in an uptrend, for the trend to be broken down, we need to see a failure to make a new high. So we'd first need to break above an external high, and then we'd need to make a lower high and then go down. But first things first is we need to make the lower high, and we need to take external liquidity. And when price takes external liquidity, then we find ourselves in a situation where there's a potential for a decline, and an aggressive decline at that. And that's what we're looking at here. So we have two things setting up. The first thing we have external liquidity already being taken, indicating there's a potential for reversal. After that, we now have this gap that's set up right after the sweep of external liquidity, which we can see right here on this day. After our sweep of external liquidity, we managed to have an opening gap set up. This allows me to now patiently wait to see how price reacts at this level. Now, if we have a decline going forward, which I'm expecting over the next couple of days, potentially even today, however, over the next couple of days, most likely, if we have a decline below this gap back into our range, this will confirm as external liquidity sweep, and we'll have an opportunity for price to go lower. Okay, so going forward, what are we expecting to see? We're seeing a decline from here. We're seeing this price close below our opening gap to close the gap. And in prior situations when a gap is closed, and I'll show you examples of this, when a gap is closed, this is an indication that sellers are about to take control. And momentum is about to feed in the seller's direction. We see this right here. On 25th, we had a gap higher. On the 28th, price closed the gap, and then we had a shift in market structure the day after, and then we had a slight decline. I can show you this as well. Back here, if we take a look, we had a gap close here, price gapped higher, the gap was closed in the downside, and then we saw price rally back up, retest off what we call an order block, and after price retested this level, we saw a massive decline into our April crash. So as you can see, when price does close a gap, we tend to see extra downward movement in that direction, because institutions have noticed that this area is not being held by buyers, and a failure to hold it insinuates further downward movement. The question is, where are we headed to? there's a few places we can go to. The first place we can go to is liquidity, and before even getting to liquidity, we can get into our gap. But my belief is once we get into this gap, we're actually going to end up closing this fair value gap and, and target the lows of the gap here. And after that, the next place is going to be our liquidity down here, as well as further liquidity resting in this area. And after we take out this liquidity, we're headed to our liquidity pool, which is the build-up of liquidity all around this area. And this is where I think things get a bit messy, and this could take place most likely in the month of November, or probably early into December at the latest. But my belief is we target this area quite aggressively in an attempt to rebalance all these buyers in this area and sweep out some liquidity. My guess is we're headed straight back down to this order block, and when price does reach this order block, we should see some sort of a hefty bounce back in our bullish direction. But the main thing is we want to sweep out all the buyers who have positioned long into this trade, due to the, when the markets are bullish, when prices are at all-time highs, institutions, retail investors, everyone becomes really confident about the trend, and buying at all-time highs is not necessarily a bad thing. Usually all-time highs is an indication of further upward movement, but there's some situations where price actually fails to go higher, and the reason is overly bullish sentiment could be one, or just seasonality, and we are in a weaker seasonal period. If we hop onto the weekly chart, a pullback to this area down here is not necessarily gonna completely eradicate the trend. As you can see, it's most likely just going to be a minor pullback, especially in the month of November. If we do get a quick and aggressive pullback, it could just easily be brought up into the month of December. We could actually rally higher into December and have all-time highs into year end. So there's quite a lot to look forward to. Volatility provides the best opportunities for traders, and that's what I'm looking to do: capitalize off the decline and capitalize off cheaper prices. Hope you found value in the video. Hit the subscribe button, and I'll look forward to seeing you in the next video.